Hey friends, Coastie Chris here. Let me know in the comments below what you think of my new hat. I got it on a dare and I think it's pretty spiffy. I'm trying to find ways to use it because, well, the 20s are back. It's just kind of a 100-year-old look here. Anyway, so today I want to talk about some concepts about investing in the stock market. I just recently put out a video about how to start investing, and I realized that I wanted to help you, the people that I care about. If you're watching this video, I care about you, and I want you to succeed and have that individual freedom, that financial freedom, to be able to live the life that you want to live, so that you can feel fulfilled and just be happier. So, to do that, you really need some knowledge in order to best utilize the stock market. And the stock market is the best tool that you can use to increase your wealth. It's been used for hundreds of years now. The Dutch invented it, and with the Dutch East India Company. The word stock comes from a section of the boat that you could buy, and anything that fit in that section of the boat was yours. You bought that property. And so we're a little bit more sophisticated now, but you really need to know what you're doing in order to effectively utilize the stock market to gain wealth. And then that wealth you can then use to gain a satisfying life. And I hope that you'll use it to get out in nature and enjoy what nature has to offer. So today I want to start this series and go over in each of these videos just a few topics that will make you dangerous in the stock market and that are really fundamental so that you can be an investor and not be intimidated by all this jargon that you may not have been introduced to before. So what we're going over today is we're going to go over compound interest, we're going to go when to buy, and we're going to go over dividends. These are three very foundational concepts that once you grasp them, you'll realize the power of the stock market and what it could do for you. Now, in the stock market, your best friend is time. And anybody who is in their 50s and 60s and didn't do what I'm about to tell you and teach you how to do in this series in their 20s and 30s will tell you they got a big disadvantage. So to start young is the best advantage you can do. If you're in your 50s and 60s, heck, don't wait any longer. Definitely get in the stock market and take control of your own financial freedom. So, compound interest, our first topic for the day. It's the only play in the game. And it's the greatest game there is to play. That is the stock market. So what compound interest is say you take $100, you put it in the stock market, you have $100. That's year one, $100. I'm gonna make that bigger. $100. On average, the S&P 500 averages 10% a year. 10% and some change. I think it's like 10.4%. So if you're doing anything else with your money that gets you more than 10%, you're doing great. If you're doing anything that gets you less than 10% a year, stop doing that. Put your money in the market in a S&P 500 index fund. VFIAX is what I went over in my previous video, is my recommendation. Again, of course, I'm not a financial advisor. I have no legal authority to recommend anything to you. This is just for entertainment purposes and for me to express some of the knowledge that I've gained. So you have $100 and the S&P 500 averages 10% a year. So the next year you have $110. Simple enough. But the next year you keep your $110 in there. You don't earn money on the $100 that you first invested. You earn money on the $110 that the market has given you on top of your $100. So what that looks like is the next year, here you're gonna be at 121 because you've added $11, 10% of 110. And now you can really start to see the power of compound interest. The next year you're gonna be at 133.1, and then the year after that you're gonna be at Let me just check my notes. Yeah, 146.41. So here, after 5 years, you've taken $100, and by doing nothing but keeping it in the S&P 500, an example being VFIIX, is on average, now it's not going to do that every year, but on average, you're going to be making this much. You're going to have this much after 5 years. And that's incredible. You've done nothing, but that's increased your wealth to this point. Rather than just keeping it in cash, if you had it in a bank, you'd have $100 or, to be honest, a little less probably during that same time. That's compound interest. Then, before you know it, you're making money off 146, and then you're making money off of the $1 million that you now have in the stock market. That's when people really get financially free, is when you have enough money to just live off of the interest that you've gained from compound interest. Say you have $1 million and you make 10% a year, well, that's $100,000, and that's more money than a lot of people make throughout the whole year, and you might be able to just live off of that. That's compound interest. Again, it's really the only game there is to play, with one exception, and that's what I'll tell you in our third section, dividends. But so I should say it's not the only game. It's the major play in the stock market is compound interest. It's when the value of your stock in a company or a set of companies increases. Now, the second thing that we want to go over is when to buy. Wouldn't we all like to be able to time exactly when to buy Tesla, exactly when to buy Apple and Microsoft, but you can't. So there was a phrase that my economics professor or economics teacher in high school said that really stuck with me, because it's kind of a tongue twister as well. It's time in the market is better than timing the market. So I'll repeat that. It's time in the market is better than timing the market. And there's all sorts of studies, and I encourage you to go out there and take a look at it. But if you bought earlier in life at the worst times to buy, you would still be better off than somebody later in life who bought at the best times. So what that means is the best time to buy is right now. It's today. And that may not be exactly true for one stock, but overall as a theme, the best time to buy is right now. And then just hold it. Warren Buffett says, the best advice that he can give somebody is get into the S&P 500, buy an S&P 500 index fund, so an ETF. And if you want to know what that is, check out our previous video. Get into the S&P 500 index fund, and then go back to work. Don't even think about it, just hold it indefinitely. And so we'll get into some more of those tactics, concepts in later videos. But the key to when to buy is now. And there are so many people who are kicking themselves, and I have lost out on so much money waiting for the right opportunity. And so I'm not perfect. I'm not going to ever tell you that I am. But the right time to buy, if you have found a stock or a mutual fund or an ETF that you want to invest your money in, your hard-earned money, then the best time to buy is now. Now, with that said, of course, there are opportunities to buy that are maybe once in a lifetime. Like what we just went through this February, March, April, it was a once-in-a-lifetime opportunity. And when you go into a store, do you want to buy something at full price or when it's at a discount? And that's what we faced in March of this year. Everything was on a discount. Everything was on sale. And that's when you want to buy. And so it's important to keep some cash on hand so that you're prepared for those dips in the market. Jerry Romine is a great YouTuber who does great videos. I highly recommend you check it out. Just Google Jerry Romine. And he has a really cool mug, actually, kind of like this mug. But it says, "Don't be the dip, buy the dip." And so keep some cash on hand for unknown circumstances to hit the market. And then your favorite stock, say that's Tesla, it might dip for reasons out of your control with the world. Like we go to war with somebody, and everyone's scared, and they're buying based off of emotion or selling based off of emotion. But you, as a savvy investor, know that they just put the best deal on sale. You go into Prada and you get it 90% off. Well, then the next week they're like, oh, what did we do that for? The stock market will bounce that back up and say, oh, it's not actually, Prada didn't actually lose 90% of its value. We were just emotional at the time. And you were able to come in and get that at the right time. However, I want to reiterate, the best time to buy is now, and just hold that position for as long as you can. We'll get into some more concepts later, but I do want to just mention here that if you hold something for more than a year, you pay less taxes on it too. We'll get into that later. So the third item that I wanted to cover today is dividends. So there are companies out there that are relatively safe and they're not really growing anymore. And that's the first one is compound interest. That's for companies who are growing and expanding their operations, and the value of that company is increasing. Shares of say, Coca-Cola or Pepsi, these are massive companies, and their share prices don't fluctuate that much anymore. People who drink Coke drink Coke. People who drink Pepsi, and they're not really dynamic. Companies like that, they attract investors by offering what's called dividends. Dividends are just cash payouts, and so you can own a part of the profits of that company. They still want people to invest in them, and they know that they're not going to be growing. So how do they attract people? Dividends. And dividends are paid out at a certain time period throughout the year, so that's quarterly, so 4 times a year, or monthly, depending on the company. And what's great about those is it allows you to have cash and a safety net, and then you can turn around and invest that right back into that company, or invest it in something else, or use it for life. And a lot of folks, when they get to a certain point and they have a lot of money, they don't want to risk that amount of money on some new speculative compound interest earning stocks. They want that safe dividend check every month, every quarter. And so that's another option. That's really the second way to make money in the stock market is through dividends. So we've gone over compound interest, we've gone over when to buy, and then we've gone over dividends. Please comment down below, especially if you like my hat or not. And let me know if you have any questions. I'm going to be doing more concept videos to help build your knowledge so that you're not intimidated by all this mumbo jumbo in the stock market. You can be a more effective investor and then ultimately live a more enjoyable life. Get out into nature more if that's what you like to do. Spend more time with family and just live the life that you want to have and you will be satisfied with. So don't forget to like and subscribe. Check out some Coastie swag with Teespring, and I appreciate y'all being here. I care about you. Stay safe. Have a great day. Coastie Chris out. Oh, my clicker's not working.